Yes, first of all, thanks everyone for joining us this Friday morning to I guess our monthly angel investor insight series where we get different sort of angel investors to come and share their experiences. And so today we have Mr. Asgari Stevens. So before we start, just want to let you guys know about a couple of deals that we're having on our ECF platform right now. The first one is Green Factory. They are a sustainable manufacturer who's been around for close to 29 years right now. And the new generation has taken over and is trying to digitalize the business. And the other company that's raising with us is Green Lagoon, which is a renewable energy company. And what they do is they take the palm oil mill waste, convert them into biogas, and then eventually renewable energy. So Green Factory is the first berhad that's raising on any ECF platform in Malaysia, and Green Lagoon is the what is to be the largest deal ever raised on an ECF platform. So if you guys want to learn more about that, you can check it out on our website or scan your QR code there. And in fact, Green Lagoon is now pre-live. So if you want to reserve your investments, you can do so as well. And the other thing we have coming up in early March is our ECF Accelerator program. It's a 4-week program where we take SMEs and later stage startups through the journey of what they need to know before they fundraise via ECF. So a lot of SMEs and later stage startups still don't know what they need in terms of their financials, the evaluations, the legal aspects of it, what equity instruments to offer, etc. So we have industry experts such as Zico and Crow coming in to educate these SMEs, and the top 2 winners from those programs, we will convert our ECF success fees into equity. So if you are a startup founder or if you're an SME, you can register for this program as well. We're waiving the fees of 5,000 for our first cohort. Right, so a bit about Leet Capital. So for those of you who don't know, we're one of the 10 licensed ECF operators in Malaysia. In fact, we're one of the newest in the block on the block. And I guess what sets us apart is we're part of the Leet Ventures ecosystem. So those of you who know Leet Ventures, we run accelerator programs for very early stage startups, so the pre-seed stage startups. And then we also have a VC that we invest into those pre-seed deals as well as some seed stage deals as well. So there was a funding gap in terms of helping the more later stage startups and SMEs fundraise, and we sort of started the ECF platform to facilitate that. And for those of you who don't know what ECF is, it essentially is a means to sort of democratize the fundraising landscape, right? Traditionally, only angels or your high net worth individuals or even the institutional investors could invest in private equity deals. But right now with ECF, anyone, i.e. the public, can sort of take part. So you could possibly invest in your favorite local coffee shop that you've been going to for the last 10 years if they are fundraising. So that's really what ECF is. So if you like to take part in some of these deals, like the ones we have right now, Green Lagoon, Green Factory, or if you're an issuer as well, and if you want to fundraise via ECF, head over to Leet Capital, select sign in, register an account, choose which type of role you are, whether you're an investor or you're a company that wants to raise, fill up some details on yourself, a bit more details as part of our KYC procedure. And this part is really important if you're registering as an investor, for you to sort of select what type of investor you are. So yeah, once you select that, that's basically it. So in terms of your investor selection, we've got three types, which is your retail, angels, and sophisticated investor. So for us, we like to follow the guidelines that SE has given us. So there are specific guidelines in terms of how do you classify yourself as an angel and sophisticated. You can learn more about this from our website. And if you do select those investor types, you do need to submit some supporting documents for that. But once you submit that, this is your dashboard, and this is where you can sort of see some of your investments, etc. And that's pretty much it. So I guess onto the poll before we start today's session. So we sort of always have these polls, and so the question that we want to ask, I guess the first question is, do you guys have any experience of investing in the private or public equity markets, right? So be it Bursa or even in the US as well, or have you dabbled in the private equity space? And the second question that we want to ask is, are you part of any angel networks? So Erin, could you start the poll, please?
Sure, give me a sec.
Sure.
Can you see the poll?
Yep.
Okay.
Okay, cool. So I think so it's very different from the last time. I guess the last event that we had, most people actually have not invested in any sort of in equities, but we can see that 50% of the people today have dabbled in the public equity space. But I see most people are not part of an angel network. Okay, cool. So I guess we'll move on to, I guess, today's session. As I mentioned, we have today Mr. Asgari Stevens. So for those of you who don't know, Mr. Asgari is the founder and managing director of Intelligent Capital, but there are a couple of other VCs that he's part of as well. And so Asgari, thanks so much for taking the time to join us today. I guess for the benefit of our viewers today who don't know you, maybe you could give a quick introduction to yourself.
I've got a commerce background. I studied commerce at university, came back, worked for a small family business in the middle of a recession, so had to operate it. Very, very difficult. Good learning, but very, very difficult times. Sorted out a lot of the problems, but it was still had to sell lots of stuff, but it was a good experience. I went back to study, came back and I worked for a big corporation, doing kind of line management stuff, also very interesting. Did all sorts of stuff because it was a startup. I'll tell you the company, it was Tegas. It was the start of Tegas. I was employee number 14. So it was a very interesting time, did everything. Then I went off and for a couple of years became a stockbroker. Tegas, they work people very, 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 very hard. So after 2 years, I was burnt out and I became a stockbroker. After a couple of years as a stockbroker, also burnt out. One good thing about being a stockbroker is you get very well paid, so made money. I went back to Tegas as investment manager, did that for a couple of years. Then I left to start up an asset management company that we kept going for 25 years. No, 24 years. We sold it about 3 years ago. Called KSC. Did pretty well, I think. You know, it's a good firm. I was very lucky, had really superb partners. And then the internet boom got started, and I've got an American friend. He said, like, why don't you get involved in venture capital? So I started with one of my friends. We started up some small venture capital companies. We got some money from the government. Then we gave that up because managing money for the government is very hard. There are too many conflicting objectives. You know, they want you to invest in IT. Must be 30% Bumi. Must be Malaysia based. I mean, it's nothing about making money, but it's all these social objectives. So we weren't being paid very well. So I gave that up after a couple of years. And I enjoyed the angel investing. So I have continued to do it since. So I invest in companies, had my asset management company. So that's my background.
Okay, cool. Thanks for sharing that. So I guess coming back to KSC, right? So that was a fund management company. So I assume primarily it was public. move start your own VC? Because obviously it's a different when you look at private equity and public equity, right? So what made you want to dabble in that space?
I'm kind of really curious. I invested in a company that was doing chlorination of rubber gloves. That was a good friend who started it up. That we did okay. We had some amazing years, and then we had a great chance to sell, and we didn't sell. And eventually, the market caught up with us. So I just enjoyed the process. Invested in, even at that time, invested in a company that used to sell handphones, and we had a network of 30 shops, I think. And then 1997 came and wiped us out. The first Asian crisis. We had an offer to buy us out for 30 million, which my partners turned down. And then within 6 months, we closed the doors. So I liked investing in all this stuff, and I like the idea of investing in technology companies and fast growth companies.
Okay.
Curious too.
Okay. So I guess then my next question would be, I guess you were part of a fund, you were part of KSC, and then after that you started Intelligent, if I'm not mistaken. So how was that process of, in terms of how you look at your selection of companies to invest in, right? How does that differ? Because, and the reason why I'm asking this is because from the poll we saw 50% of people were already investing in the public equities, right? So for all the people that want to dabble into the private equity space, what would be your advice or sort of advice that you can give to them?
Years ago when I was studying, there was this really excellent article by a guy called Arthur Rock, who is the father of venture capital. And he says 90% of the investing decision in venture capital is about the people. So that has always stuck in my head. And that's the kind of philosophy I like to bring to kind of investing in early stage companies. It's really about the people, I mean, I don't think people realize how difficult it is to build a company, a successful company, and sustain it. It's, you need a very special entrepreneur. The pressure on their family, they're missing all the time. They don't have enough money. They're constantly worried about the cash position. They're working, if you get the right guy, right? He's working 18 hours a day. He's constantly worried about cash. He's constantly trying to do sales. He's got to be a sales guy, right? Yeah. I mean, so he's doing so many things that if you don't get the right guy, he just can't cope. So to me, 90% of the decision with startups is about people. Then you've got to really look and see, is the idea big enough? Is it scalable? I mean, there are all these guys who have like rules about scaling and stuff. I guess I'm not as, because it's when you run a fund, we've actually got to think about exit. But I guess now, since I've stopped running a fund, I'm just an angel investor. And with a few friends, I've got a much longer time horizon. So I'm not so antsy about looking for a quick exit, and I'm looking for more solid businesses. So if you ask me, how has my investment philosophy changed? I guess I'm not looking for big home runs all the time, but I'm looking for really nice businesses, less downside. Okay. But maybe less upside too.
Okay, so I guess just to follow up on that as well, in terms of your investment philosophy. So I think you talk a lot about the team, right? Exactly, the team is extremely important, which is what we look at as well. When we invest in our VC deals. Any other thing in particular that you look at that would attract you to a deal?
Well, I think it's the usual stuff, right? It's got to be a company with, in a nice business which has got in an industry which has got nice runway. It's got to have a nice, unfair, sustainable advantage, right? Mm-hmm. So you either get a decent margin. If you don't have decent margins, right, you can't grow organically. And what you do is you spend your whole life raising money, which is just, you know, where instead of running the business, you spend your life raising money, which is horrible. Which is why they should leave it to experts like Leet Capital, right? Never go and raise money yourself. It's horrible. Just go and leave it to experts. And it's got to have a kind of business that's big enough, industry that's big enough, right? Some of these, I see some nice small tourism industry businesses, which guys give me, right? You know, nice business, but can earn $200,000-$300,000 a year. You know, I'm not interested really, right? I mean, it's got to be able to earn a couple of $1 million. Got to have some sort of sustainable advantage. The industry's got to be growing. I think it's the usual stuff, right?
Yeah. Any specific industry that entices you?
Now or?
Yeah, no.
Now. What am I looking at? Let me just see I think I actually made a note about what am I looking at the moment. Okay. Trying to solve problems, right? So I'm investing in a company that Advisonomics, which is trying to solve, you know, one of the big problems in Malaysia. And, you know, I'm a planner, so one of the big problems is how to plan for retirement. I think it's going to be a massive problem in Malaysia. You know, people, you look at the level of savings in EPF, and people just don't think enough about it. So I'm just trying to think, like, how do you democratize it? Because to do a financial plan is very expensive, right? I mean, I do it for my family. I do it for my family members because I kind of enjoy it, right? Trying to think about how the heck do you save enough money and what's the mechanisms for saving. So I think that's something I'm very interested in, a bit passionate about. That's got a long runway. It's a company which is trying to solve the problem of excess inventory in the car industry called SpareX. I'm looking at an algae company. A lot of money has gone into that sector the last couple of years, but it's really treating. I'm interested. I heard you talking about treating palm oil mill effluent. Big problem, because they've really got to clean that stuff because the COD is too high. So I think algae can be one solution. And you know, you can use the algae for multiple purposes. So looking at that, I keep thinking about doing something in the aged care business. You know, my mother's elderly, and so I've been reading up a lot about it. My daughter did a master's degree in this thing about aged care. So I've been talking to her about an idea about what kind of business we can do. You know, because the high rate of diabetes in Malaysia, you know, 20 years down the road, you're going to have a very high rate of dementia, because those two, you know, dementia is sometimes called, you know, type 3 diabetes. So you've really got all these, you know, that's going to be a big problem in the future. People haven't saved enough. We don't have the social systems. So trying to think like, okay, how do I make money in that? Look for companies in that space. So those are the things I'm interested in.
Okay. And I guess coming back to the a bit more on your investing process, right? Your investment process. Is there things that make you stay away from a deal? Any red flags that, in particular, that you know is very apparent in the deals that you evaluate?
I think it's really about the people. You know, every time I keep doing it, and I keep getting hammered. You know, I keep thinking I can make a business work in a growing industry with weak managers, and I think 3 times I've tried this, and it's failed. So the first thing is you got to have fantastic people, like amazing people, like check their references. they've got to have a really strong track record of stuff that they've done, you know. It's deep industry experience. I mean, I look at the business plan. I mean, I'm not going to hold them to the business plan, but you know, a well-written business plan gives you a lot of insight into the way they're thinking, right? The quality of the work they've done, right? How realistic they are. You know, anyone who starts talking to me about exit and listing and all that stuff from the start, nah, wrong reason for doing it, right? First thing is you got to have enough passion to make the business work. So if anyone starts talking about exit from day one, red flag.
Okay.
If the business plan is not good enough, and it's got to be really good, red flag. That's why I think, you know, all the incubator stuff that you do is good, right? Really helps the guys really think about the business before they kind of get investors' money, right? And think deeply and present something of quality, you know.
Okay. And when it comes to, I guess, the evaluations, and I always ask this to different angel investors that I meet, right? Is there a specific cap that you put on how rich of a valuation you would go into? And also, I guess a follow-up question on that is, you know, today we see a lot of, I guess, the sexy industries like fintech, right? A lot of these startups are going at very, very high valuations, like in excess of 10, 20 times their revenue multiples, right? So what are your thoughts on that? Is it too high, or is it justifiable? Just because of, you know, it's a sexy and growing industry.
I mean, I used to not think too much about the valuation, but now I think about valuation. I used to not think too much about exit, but now I think a little bit more about exit because I'm just getting old, right? I mean, some of the companies that I've invested in are doing well, but they're like 10 years, man. Shit. You know, at some stage, I got to get some money out, right? It's my own money. Since it's my own money and it's not professional money, you know, the valuation's tied to exit too, right? Too high a valuation, and how the heck are you going to get out, right? So I want to really have a look at comps, and I think, you know, if I'm going to put in my effort and be like a bit of a principal, right? Not just an investor. I want a bigger stake, and the valuation can't be too rich. If I'm just an investor where I'm not putting in a lot of work and my risk is mitigated, and you know, there's many ways to mitigate the risk, but how you structure the deal, right? Then I'll accept the lower rate of return. You get what I mean?
Yeah. I guess just talking a bit more about you mentioned about the effort, right? So how hands-on are you as an angel investor? Because you know, some angel investors just like put their money there and then they sit back and, you know, just if it generates returns, it does lah. But I know there are some who are a bit more active. So how's your philosophy on that?
You know, Intelligent Capital, from day one, we've always been really hands-on. You know, for a company to break out of orbit until it gets out of Earth's gravity, it's just so hard, right? I mean, the lift-off phase is very, very difficult. And I think that's when you need all hands on deck. I think investors have got to really focus on that. And I think that's when we put in a lot of effort. We, like our company, that's when we kind of really focus on those guys, right? So it's a hands-on, try and have a toolkit, meet with them often, help them think, kind of mentor the CEO. It's hard, you know, if you're the CEO, you need someone to talk to, right? Half the time, building a business is not smooth sailing, man.
Yeah.
Most of the time you're in agony. You need someone to talk to.
And do you think at least the startup founders in your portfolio, do they want this advice, or are they more of the attitude like, you know, I know what I'm doing, I don't need any help? Yeah.
I mean, if they say they don't need any help, and the results support that attitude that they're doing very well and they produce regular reports and cash is not a problem and it's growing according to plan, then I'm more than happy not to spend time on them. Even better, right?
Okay.
But I'm there if they need help.
Yeah. Okay. So I guess for those who know Asgari Stevens, especially in the private equities market, you're obviously notable for your investments in obviously the likes of BFM and JobStreet, right? So just walk us through that process, right? Why did you decide to invest? Let's take JobStreet, probably because that was the biggest one. So what was the rationale, like, I guess, for investing in JobStreet? Your whole thought process around the investment process.
First of all, great people, right? Amazing team. Really just so clever and just humble. It's like, just fantastic leaders, fantastic team, really smart people, really good business model, really nice margins, didn't have to come back and keep asking for money. They grew that business once they got the flywheel going, they pretty much grew it organically, right? They listed, never did a fundraise, just fantastic team. And I thought at that time, clear market need too, right? I mean, it's a great way to get information, right? The model that they had, I thought was really clever. And great people. I know them too, right? That helped.
Okay. So when was the point where you exited JobStreet? And
okay. Here's a bit of a sore point with JobStreet, because we were in a fund, right? Yeah. And at that time, I had this very silly philosophy. I had 2 bites at JobStreet. One was my first fund. We were nice and early, but I had an idea in my head that we were a venture capital fund and we would not manage private security. So when it listed, we vested all of our shares to our investors at the IPO price. It then went up about 10x. So we didn't make the massive carry. We took our carry in shares, so we did okay, and we were investors in our fund, right? That's why we did pretty well as well.
Okay.
So we pretty much we gave it to our investors, and we said, like, hold on to these shares because there's going to be a lot of upside. And most of our guys just hung on to the shares and made 5 to 10x.
Okay. I guess, okay, but as an angel investor, how do you know when is the right time to exit, right? Is it when you meet your specific ROI, that's when you just exit? Or how do you look at it?
That's I tend to fall in love with my companies, and it's like we invested in a oil palm company in Sarawak, right? Backed a fantastic team. They did an amazing job, but they basically got it listed in London, and then we made about 130% in 1 year. It's like, okay, shit, that's a lot of money. Just take that money back, thank you. And then it proceeded to go up 4 times more. I was a bit early, but making 130% in 1 year is not bad. Hung on another 2 years, I might have probably made 400-500%, but no regrets.
Okay.
Liquidity is hard, right? All these private companies, liquidity is hard. If it looks ridiculously overvalued, we set up a research hub in Malaysia for VOIP company in the early days of VOIP, right? And then these guys got listed, somehow wanted to get listed on AIM. And it wasn't even a very great company, right? But we reversed our Malaysian operation into their company and got public company shares. And it just went nuts. And I just thought, like, this is insane. So we sold. because it just didn't make sense, right? And shit, if somebody's going to pay me money when it doesn't make sense, I'll sell.
Okay. Interesting. I guess this is more of an economics question, or rather like a market outlook. So as you mentioned, you've been a part of multiple financial crises. The 1997 one, the 2008 dot-com bubble, and so you've seen it all, right? So, and I was obviously too young during those earlier financial crises to even understand the magnitude of what is happening, as I'm sure is a lot of our viewers today. So how does the pandemic differ then in terms of magnitude that it has on the financial market?
I mean, I think those crashes are much more serious, right? I mean, there were, I think Asian crisis, if you were there, was just terrible. I mean, 2008, because it was kind of offshore and our markets came off, but I always felt that our market was not overvalued. I'm also a fund manager, right? So I knew it was overvalued, but I knew our markets were okay and I knew our markets would come back. So no panic. 1997, we had gone through a massive expansion, and that was hit home much harder. That was, but again, we're very conservative. We're fund managers, right? So we saw what was happening. We de-geared all our portfolios, and then the minute the Thai baht started crapping out, we sold everything. And I'd have to say, in KSC's credit, we ended up 1997 up, and 1998 was a good year. So, but we were a very small company in those days, right? Just a couple of high net worth individual investors. So if you're asking me, we kind of saw it coming, so we were positioned to be very careful. The COVID, our Malaysian stock market had actually been performing very poorly the last 7 years, right? I think we've had one up year out of 7 years, the stock market. So to be positive is pretty good. If all you did was invest in the market, like an ETF, you would have got smashed. But there are managers who can beat the market now. So you got to be nimble. So if you're asking me, it's how well prepared you are. I think if you ask me about the economy, I think one of the issues is recovering the savings, right? A lot of people have used up their savings. I think it's really impacted a lot on the B40. And I don't, you wonder whether you've got the political will to really sort out these problems, right?
Okay.
But that we could go on for another couple of hours there.
Okay. Yeah, I guess I'll shift it back to public equities, right? So you even now, do you still hold holding? I guess, do you have a portfolio of public equities as well?
Well, I sold out of KSC, and the reason we sold out of KSC about 3.5 years ago was that we all started this company when we were relatively young, and after 20 over years, we're all getting old, and my partners were fed up with it, and I wanted to keep it going, but they're like, nah, guys, I'm tired, and we've all made enough money, like time to move on. So they wanted to retire, so we sold it to one of our partners who continues to run it, and we wanted to make sure there was continuity and our clients were looked after. But I've had an opportunity to buy another asset management company, Astute Asset Management, formerly known as Apex Investment. So hoping that we can do some good things with that. I think it's it's a turnaround situation. One guy wanted to sell a big chunk of the equity, and I know the CEO, and he asked me like, dude, would you like to come back and take a stake? And you've been involved with running asset management companies. It'd be quite useful to have you on board. So okay. So that's my new investment as well.
Okay. But I guess as an individual, do you still take part in the public equity market?
For many years, if you're a fund manager, the reporting requirements are pretty stringent, So I really didn't want to do it if I've got money in a fund and I'm managing other people's money, right? So I put money with fund managers, and occasionally I'll take one or two big positions and then just declare to the stock exchange, right? Mm.
Okay. What was the philosophy? I guess the investment philosophy when you were working at this fund management companies, was it always just looking at undervalued companies and hoping they'll come back to their
No, I think it's all about people, right? I mean, KSU, very lucky. We had a couple of fantastic managers, right? One guy kept saying, I think his incrementum fund's been incredible. I mean, 13% compound over 10 years. I put my niece's money with him, and over 10 years, he quadrupled the money. Yeah, I mean, pretty amazing, right? I mean, just the power of compounding. When my brother passed away 10 years ago, I got a bunch of money from my nieces, left him with a small amount of money, and he's turned it into a decent amount of money. Mm. And then we had another product, which was the high yield fund, just buying high yielding dividend stocks and bonds. And basically when there's yield compression, yields have been dropping for like 30 years, right? So over that period, the last 10 years when yields dropped, I mean, that fund did very well too. That fund also returned 13-14% per annum over a very long time. I mean, as good, quadrupling over 10 years.
Okay.
Pretty good. So, I mean, it's not just value investing.
Mm.
The incrementum was a growth fund. But, you talk about people, kept saying, what was he? He was institutional investor, top researcher in Malaysia for like 6 or 7 years in a row. Number one analyst, and then before he became our partner.
Okay. I guess I asked you about the financial crisis part of things, but even also in the private equity scene, because you've got the decades of experience, right? How do you think the ecosystem has changed in terms of maybe the startup ecosystem? How has it changed back then in the 90s, I guess, to what you see today? And what are still the biggest problems that we've not solved in our local market yet?
I think there's a lot more money available now. I think the market's really much wider, not necessarily deeper, but there's a lot more money available, And you've got guys like angels who are more willing to participate. I think it's easier for these startup companies to get funding. I think the problem is just follow on funding. I think it's not, the market's not very deep, right? That Series A, that Series B round, still, that's almost institutional money, right? And there's not enough guys who are willing to put money into that because we don't have enough of a track record. I think Penjana have started up a couple of funds, and I'll put a pitch in here. I'm advising one of them. I'm just there actually. Just my friend got the money. He's running one of the funds, and he said, like, dude, do you mind just helping out? So I'm like, okay. So once, if they need any advice or whatever, I just try and help them. And whenever I see deals that are too big for me, I pass to them. And I think there's not enough follow-on money. I think that's the next need of the market, right?
Is it, and do you think that's the reason why Grab moved to Singapore?
I mean, for sure. I mean, Singapore has a much more developed Series A, Series B, Series C funding, right? There are a lot more funds there.
Okay.
It's not more, because that's a bit more institutional money, right? The seed round everyone can afford, right? I think if the seed round's $1 million, you can all afford it, right? But I'm just looking at one company doing a Series A, 5 million. Really nice company. really good people, really good growth, really good upside, but it's $5 million, man. That's a lot of money. Shit, if I put 250,000, no impact, I don't know, they might not even accept my money.
So what do you think? What do you think then we need in the market to sort of attract, I guess, more of this bigger funds to come in, right? Do you think it's more on the government that should have more initiatives for this, or something else?
I think part of it is, people want to see a track record that, guys who've done the Series A and Series B, it's kind of chicken and egg, right? Once you see that it works and these funds make good money, I think you'll get guys who will then start to put together funds, right? I'm getting too old to invest directly anymore now, so I'm always looking out for good funds. I'm always on the lookout to invest. Because I was fund manager, I can't buy stocks for many years, right? So I was always looking for good funds to put my own money in, right? And public. So I think I know who the good public equity guys are in town, but the private equity guys, probably Brahma, Credo. There's a new startup, small firm, one of my old analysts. I think he's going to be quite good. Very ambitious young guy called 5X Capital, I think. Very ambitious guy, very smart guy, very careful guy. Not a genius level like Brahma, but pretty good. On the venture side, still early days, right?
Yeah. I mean, I guess those who don't know, I'll sort of plug ourselves here as well. Those who don't know, ourselves, 137 Ventures at Jari, and a small fund as well. So any sort of startup founders in the pre-seed or seed stage that looking for funding, you can reach out to us as well.
Yes.
Okay.
Actually, our terms are too generous on that. We got to have a word about that, Justin. No, I'm just joking. We're giving the startups too good a deal.
Okay. I guess just wrapping up, since we've got about 10 more minutes left. Looking back at your decades of experience, right? Is there something that you would have done differently, be it your career-wise or choices that you've made? And yeah, so I guess for those who are coming into the or new to the angel investing, they can sort of learn as well from maybe some mistakes that you've made in the past.
In angel investing, or in
from angel
in setting up a VC company?
I guess angel investing.
Okay. I think I'd probably be a little bit more focused on exit. I never really focus on exit. I guess I'd focus a little bit. It's one of those things I never did, I probably wouldn't invest overseas. I think it's very difficult. I don't know enough. I think if you want to invest overseas, get a fund, right? I just invested in a fund recently overseas. I was just trying to think like, shit, I'm sort of touched, right? So I look for one of the best, looking for great overseas funds, invested in a foreign fund. I've got to say, one of the great lessons I learned when I was at UT is fund selection. Because even when you work there, there's no way they were going to let me, a very foolish young man, manage their money overseas, which is very smart of them. So they got one guy in who basically set up a fund selection process for us at UT. And that was quite a detailed fund selection process. And that was very, very useful. So I think if you're gonna go abroad, what expertise have you got, right? It's too difficult. Get a fund. It's very, angel investing, I think, is got to be a bit of a passion. I think it's incredibly time consuming, right?
Yep.
If you're going to do it on your own. It's kind of my full-time hobby. I mean, it's kind of a business, but it's more of a hobby, right? I mean, I've got an asset management company to run, but I really enjoy looking and working with entrepreneurs and startups and stuff. So I spend I'm a full-time investment professional, so I'm spending a lot of time on it, right? So if you don't have that time, it's going to be very hard to make consistent decisions, right? And put in the work. You got to put in the work.
Okay.
I'm just trying to think like what more to say to angel investors. It's bloody great fun, but it's a lot of work.
Okay. I guess we had a question for someone in the chat as well. Mr. Yong asked, how would you advise investment professionals to start out their own angel investing? What would be the optimal fund size, value creation angle? What's the optimal team size? Any deal sourcing channels as well?
Sorry, could you just repeat that? So an investment professional, he wants to start up his own angel fund for himself or with a few other people, whatever, right? Okay. And what's he looking for? He wants advice on deal sourcing.
What should be the optimal fund size, etc. I guess what would be the mandate as well in terms of value creation as well?
I think it depends on how risky they want to make it, right? I think you've got to have a circle of people who've been successful angel investors. That's probably the start, right? And just kind of tag along on some of their deals and learn along the way. You don't want to have all your eggs in one basket. If you're brilliant and you're very lucky, you can put all your eggs in one basket and watch the basket very carefully. But I think if you're going to be an angel investor, you've got to right size your investment, because if you don't, it will really really affect your returns. Our first fund, we had one very big investment that failed. We had 4 or 5 smallish investments that did really well. We had one big investment that did well, and we had one big investment that failed, and that completely dragged down our IRR. We should have thought a little bit more about right-sizing that investment. Should have dribbled the money in instead of just writing one big check, So I would say right-size your investment. If you're going to start up, and if you know smart people who've made a lot of money investing in startups, right? I think just hang off their coattails and just co-invest with them for a while, right? Until you really learn what makes it work. And once you just start putting money out, people will come looking for you.
Yeah. So
I guess that's why Intelligent Capital, we're not a big fund. We're like small little guy, right? But I see lots of deals.
Yeah. So I guess
because you pull the trigger.
Yeah. So I guess for someone starting out new, right? An angel investor he's built up his wealth now. He wants to dabble in the startup ecosystem. How does one find these deals then? Is there somewhere they could go to?
Well, you can go to ECF platforms like you guys, right? I mean, you can talk to the incubator guys. I mean, the incubator guys, not only you, but also Doc Siva, always looking for trying to raise a fund, right? To invest, right? But I've looked at those deals that come out. I mean, you've got to have a special angle. So like Bikesh, the fund that we've got with Leet Capital, right? I mean, we are, that fund's looking at the best of the companies that are coming out of 1337 and having a chance to invest on really good terms, right? I mean, if you are too late to that game, you're going to be paying the market rate of market valuation, right? Which will be much higher. So you've got to kind of work out what's your edge too, right? So I would start to speak to all the ECF guys. I mean, you guys are always looking for people who are willing to put in money, right?
Yeah.
I mean, shit. Any angel investor if he calls you and he says, I've got $500,000 to invest, I'm sure you'll spend a fair bit of time on him.
Yep.
And you can do that. You do that with the 5 ECF platforms, and bloody hell, you'll be seeing 10 deals a week, man.
Yep. Absolutely. So if you've got any angels looking to dabble into the private equity space, do let us know. We've got a couple of deals on our VC side as well, not just ECF deals. If you want a bit more early stage deals, we do have a couple that we're fundraising for, so you can directly reach out to us. We have one. I guess we've got time for one last question. It was a question from someone who submitted before the event started. He or she sort of asked, what's the best investment platform to get into when the economy is looking so gloomy, that's hit by inflation, Fed interest rate increases, and possibly a war breaking out between Russia and Ukraine. What's your overall advice to a newbie investor? I think rather than investment platform, probably what the person meant was, maybe the type of investments that you're making, be it, the private equity or public equity, and then if in terms of that, there's also different subsections to them as well. So any safe bets at a time like this?
I think depends on your time horizon and how young you are. I think if you're young, you should be kind of long equities all the timeline, because I think inflation is a real problem. I think all the money creation has led to tremendous asset inflation. I think if you don't own a real asset, and a stock is a real asset, right? You buy the right kind of company, it's got pricing power. It can pass on pricing increases to the customer. Buying a good company, right? Not a rubbish company, right? So it can handle inflation, right? It's got enough of a brand value that it can maintain its margins, passing on prices, keeping its input prices low. So I'm an equities man. I'm not a bond man. So I think with yields so low and inflation rising, I think you've got to look for yields. So for me at this juncture, because I'm older, I'm a bit safer, and I want a bit of income, I would look for a dividend fund for me. The right kind of dividend fund, right? Dividend companies pay dividends typically when they tend to have little growth, because if they've got growth, they've got to fund the growth, right? So they can't pay dividends. So the cash is required to keep growing the business. So it tends to be a very stable old business, which is probably not going to go broke even when shit hits the fan. Can pay a decent dividend, and you've got to do the work to find those companies, or find a good fund manager who can find those companies. And if you're young and you're starting out, you want to talk about a platform. What we're trying to do at Advisonomics. I'm not just promoting Advisonomics, but for people to think, right? One of the ways for people to think about saving enough money for retirement, especially young guys, right, is really, you got to have a monthly savings plan. So we're trying to do this direct deduction every month, where you really salary hits the account, boom, it just goes and invests automatically. So then you get dollar cost averaging, right? As long as you've got good funds and you've got some sort of dollar cost averaging across time, you'll be fine, right? If you're young.
I guess just really quickly as well, coming back to inflation, right? Would equities be the best way to hedge against rising inflation, or something like real estate or commodities? Would that be something better for someone looking specifically to hedge inflation?
I think real estate. I think you will be a Johnny come lately. The money, the credit expansion has happened for the last 10 years. And the inflation has happened in assets, right? It hasn't happened in consumer prices. So if you're trying to put your money into already inflated real estate, and real estate markets have their own kind of individual dynamic, right? Over supply and demand. So you got to do your own work there. It's also incredibly illiquid. I'm an equities man. So at this stage, I used to own property. The older I get, the more illiquid and the more pain in the ass it is to look after it. I can't be bothered anymore. I'm trying to sell it. You know, for young people, property makes sense because when you're young, nobody's going to lend you money except against property, right? So you can't get leverage when you're young, you know, but you can get leverage for a property, right? You can get 100% on the house.
Yeah.
Nobody's going to lend you 100% on anything else. Nobody's going to give you $200,000 for anything else, right? But you can get it on the house. So I think if you do the hard work and you're young and you want to leverage, I think buying property is fine. But for older guys, no. I think I'll still go back to stocks. Commodities, you know, commodities have their own dynamic. Whenever I've gone overseas and I bought like mining stocks, I used to buy a lot of mining stocks. Every time I've done it, I got hammered. You know, it's an insider thing. You got to have a lot of deep industry knowledge with commodities. They find a fantastic fund manager because there's enough madness about that market and information disconnect that you can make very high returns if you find the right guy.
Okay. Okay. I guess that's. I mean, I wish we could stay on, but I guess that's all of the time we have for today. So thank you so much, and thanks everyone for tuning in today. If you've got any feedback, please do pass your feedback to us. Once again, if you're an SME or if you're a startup that's revenue generating and looking to a fundraise via ECF, we have a program with industry leaders like Crow and Zico who can help you in terms of getting your investor ready. As well as if you're an investor and looking to invest in some great deals, sustainable deals, we've got Green Factory in Green Lagoon there. You can check that on our website. Once again, thanks so much, Asgari, and thanks everyone for joining us today. Stay tuned to our socials for our next event as well. Thanks and happy Friday, everyone.
Hey, thanks a lot, man. Thanks, guys. Cheers.